Our next guest sees opportunity in a particularly beaten-up group, and that'd be big cap tech. Tom Lee runs Fundstrat Global Advisors and is a CNBC contributor. Tom, what'd you make of the sell-off today first?
Well, it was an ugly day. It looks like another buyer strike day. I don't think there was a ton to be encouraged by. If anything, it might have been the fact that the VIX didn't really spike, as you guys mentioned. And I think in terms of capitulation, I think some of the retail-heavy stocks were the ones taking the biggest hits, like whether it's something like an ARK ETF or the stay-at-home stocks. And so I think that's another encouraging sign. And I would say a couple of things that I saw in other markets that kind of interested me was, I do think the odds of future Fed hikes actually drop. So I think whether it's technical or not, between now and year end, the market is now pricing one less hike, and we've had the curve steepen. So if someone was trying to see a glimmer of hope in today, I actually think it's that the market has taken enough punishment that it's actually taking some of the hawkish bias out of the Fed.
So you're still sticking by your year-end 5,100 target on the S&P 500, which is, quite a bit away from where we are, at least currently. Tom, what brings us there? I mean, is it big cap tech? Because that's the area you see opportunity in right now.
Yeah, I think big cap tech is really symptomatic of the risk reward that's now prevalent. I mean, Karen mentioned it. You got stocks like Netflix or Facebook at 11 times earnings, or Google X cash at 14 times. So these names, which can still grow faster than GDP, are now trading at a 4-point multiple discount to the market. And I think there's something else that investors have to keep in mind. If you compare market valuations today to even the 2000s or even the 2020 top, on an earnings yield less bond yield, stocks are actually still cheap. So until the 10-year gets to something like 5 or maybe even close to 6%, you don't have that much compression in PE multiples. Now, of course, day-to-day stocks can get liquidated and there could be no buyers, so we could have these sloppy downside days. But I think from a fundamental perspective, stocks aren't really demanding a lot of things go right for you to have positive return.
Hey, Tom, it's Karen. Thanks for coming on, especially today. So I know energy has been a big favorite of yours, the sector in general. Did today make you think any differently, that it's played out, or this was just, it was down with everything else in the market?
Yeah, I mean, energy took it pretty hard today. It's still up 36% year to date. So even though today it's down 8%, which is pretty shocking, I think that energy down is actually a sign we're closer to capitulation, because it's one of the groups that very few actually had losses in. And so someone selling it today is actually someone trying to actually raise cash. So it's a little bit like, energy is a small weight, so it's a mini kernel that people are selling. But fundamentally, as we know, the sell-off isn't really changing the fact that there isn't enough investment in energy and too much capital was allocated to ESG. So I think energy is still a group that people want to own for the next few years. But again, the fact that it's breaking down is making it tough to say that stocks have found their bottom, but I think it's obviously much closer to a bottom.
All right, Tom, great to speak with you and get your perspective. Thank you.
Thank you.
Tom Lee. Jeff Mills, I go to you because you tweeted this out, and you can incorporate what you think of Tom's take on the markets, is that Clorox and NVIDIA traded the same forward PE. And I feel like that sort of encapsulates the market that we're in. You wonder if NVIDIA should have ever been at that level, and you wonder if Clorox is overvalued here. How do you think about that?
Yeah, sort of strange, right? And in the short term, it really doesn't matter whether Clorox is overvalued or not relative to NVIDIA. It's going to get bought if the market continues to behave this way. But I just thought it was interesting. And sure, you can make an argument that NVIDIA still trades at 12 times sales, but the cash flow and the profitability profile associated with the stock like NVIDIA, now trading at the same forward multiple as Clorox, I think is pretty interesting and speaks to what Tom is talking about, which I think is, buy quality growth stocks in this environment. I think what he believes is that you're going to see a peak in inflation, over the next couple of months. the market will start to re-rate what they think the Fed is going to do, and then people are going to start to open their eyes to relative value plays like that. And whether it's next week, whether it's next month, and whether these stocks have more downside to go, like I said, no one's going to ring a bell, but it's certainly worth taking a look at some of these quality growth names that have earnings, that have real cash flow, because ultimately I think that's where investors are going to huddle as we move into the second half of the year.
Pete, you think there's more downside in some of the higher valuation tech names that have even gotten crushed so far? And I'm thinking of the ARK names. You were active in some of the ARK names today.
Yeah, Mel, for the last week or so, they've been buying the ARK F, which is the fintech. They've been doing the innovation, and they're buying puts. And they've been aggressively buying those puts, as a matter of fact, right at the money puts that they're looking for even further roll down, because as it's gone down, they've been rolling down with it and continuing to be with that trade. So, yeah, I think those high multiple names are definitely under attack right now. That's why people are going after the ARK F and the ARK K. So I think it's really interesting. Some huge option paper in there, too. I mean, we're talking 20 and 30,000 at a clip, Mel, where they're looking for these. And that comes at a point in time where these have fallen already. It's not like they just started. These are already on their 52-week lows, and they continue to buy puts into this push to the downside. The one last thing I'd say about energy real quick, Mel, would be this. When I look at the price of oil today down significantly and nat gas down about 12%, I think that explains a lot about why energy was under so much pressure today. It really has been moving almost step by step with those two to the upside, and then again, once again, to the downside. So I think that's the rationale on energy today. I don't think necessarily people were selling because it was the winter. I think people were selling because they were looking at that price of crude and the price of nat gas pulling back significantly.